Welcome to Market Matters. I'm Nadia Hassan together with Sulhi Azman and looking at companies in the news because it's Monday. I need to cheer myself up a little considering it's been very depressing today. Ekovest up 4.17% to RM1.25. So yeah, the share price has been on a bit of a tear recently, 38% since October 2015. I think a lot of people were expecting a lot of contracts, and but the thing is, they are still not as cheap compared to some of their peers. But the stock actually did go about as high as 6%. Today. This, of course, is controlled by your friendly neighborhood billionaire, or millionaire. I don't want him to call me, Tan Sri Lim Kang Ho.
Yes.
What happened was they were awarded the concession for the construction and management of the Setiawangsa-Pantai Expressway, formerly known as Duke, actually.
Yes, another set of concession contracts being awarded. Now, this concession will last for 53 years and 6 months, and that will be worth about 3.74 billion ringgit.
By the time this is paid off, we will both be very old.
Yes, we'll be very old.
Very, very, very old. So the fact is, the whole alignment's about 35 km. It's north to south of KL, because never mind that KL doesn't need any more roads, right? University Tunku Abdul Rahman Wangsa Maju Setiawangsa-Ampang. My tongue is just twirling today. So apparently it's twirling.
Yes.
So the cost of the Duke Phase 3 was lower 3.57 billion,
Correct.
You can go buy nice cars with that. It is expected to be financed via internal funds, borrowings, and other fundraising exercises. This is yet just another feather in the cap of Ekovest. This company is already, this company is so solid in all its contracts and its relationships that I don't know what else you can say. If you look at their earnings also, that kind of testifies, right? Bottom line, although it's only 3 million, it's still up about 114.3%.
Correct, and revenue went up by 51%. And this is a very interesting thing, Nadia, because this highway, right, is going to generate and boost their incomes at least for another 53 years and 6 months. And because currently the highway contributes about 22% of the revenue and 63% to the to the operating profits. And moving forward, this is going to really be a cash cow for the company.
Well, the thing is, right, it is not cheap to build a highway. I can barely get people to pave my garden. How do you imagine paving the entire kind of road? So that's why I think the concession is this, is half a century.
Correct, and
because it is expensive.
If you look at the companies like this, they actually enjoy quite a number of benefits because they are going to benefit from the toll rate. I mean, just last year they were benefiting from 5% or something like that. In the toll hike. It's going to be a very good boost for them.
Well, I think as long as you have areas around there that the highway feed into, and as long as there's no other easier alternative, you will get people posting up. Again, I don't know how underutilized Duke is or how much is going to go. But this is just another thing just to stretch out their wings further. But anyway, just to bring it all home for you, we're looking at basically Ekovest. The share price has been running a little bit over the past couple of months, as far as I can say. So what happened was they awarded the concession for the Setiawangsa-Pantai Expressway, formerly known as Duke, Phase 3. The concession period is for a staggering half a century, 53 years and 6 months. And of course, the whole cost of it, they say it could be 3.74 billion. So we'll see how that weighs on Ekovest's financials, to be quite frank with you. Moving on finally to our broker's call for today, Sarawak Cable. So forgive my accent, I don't know why I suddenly had an accent with that. Down 3.3% to RM1.76. Today it's Leong and AmResearch that we decided to look at. Both have pretty much the same kind of views, buy for both. And both of them, Am is a bit lower at 220. Leong is 249, a bit more bullish.
Yes, correct. And Sarawak Cable today, which is controlled by the son of the Sarawak governor, has proposed to undertake private placement of up to 10% in the share capital or 31.7 million new shares. Now, the indicator price is RM1.70, and if you look at this, it's still at the discount of the current share price. And this is not surprising given the fact that they have a very high gearing for this company.
168%, actually, to be accurate with you, as at the third quarter of 2017. It's going to raise about 53.9 million from this placement, and it's the one that's going to push them. It's going to be the one that sort of pairs them out of debt. It's going to reduce it from 168 to about 151. So they actually took a lot of debts because last 2014, they had a very big acquisition trail with Leader and Universal Cable. It made them essentially the head honcho. And if you look at the lowdown that we have, they do claim they're the biggest.
Largest.
Probably justified claim, but they do claim they're the largest. So yeah, they are positive. Well, Hong Leong's view is that, look, you're managing your books, you're bringing down your gearing. We're positive on that. It's at least in the right direction.
And Hong Leong also said that it's a cheaper proxy to Sarawak growth team with a price earnings valuation at a 50% discount. And this is partially offset from the increase in the PE target from 13 times to 14 times, which is actually still quite decent as well. And for AmResearch,
well, actually, before that, Hong Leong makes a very good point. The fact is, they think this view that you just talked about was justified because Sarawak election will play a part. It's gaining traction. Apparently, they say it's going to be the end of first quarter of 116. We have to take a look. But as you mentioned, they also are a buy, and they didn't change their view either. They, again, also think it's pretty much the same thing. They think it's good for them to kind of bet on this young man who actually made this report, Max Koh. He does say that it does look to be a good thing.
Correct, and they said that they view this deal positively as it would reduce the net gearing and improve cash flow as well. And they also, this Maxco says, outstanding order book is at a healthy 1.3 billion ringgit. That would actually last the company for at least another 10 years if going by the numbers.
Well, they have a replenishment rate of quite decent, about 400 million ringgit. This is back on good prospects on East and West Malaysia. You can actually talk about a couple of the projects that he highlighted. There's an underground cable in Pengerang. It's one of the three bidders. TNB's 500 kV line package 3, and of course cable supply to the big band themselves, which
correct.
is TNB.
For as long as, to put it simply, as long as TNB is still here, they will still need Sarawak Cable to supply those cables.
All right, so just to wrap it all up for you, because we're out of time actually, we're looking at two particular companies we're looking at two analyst reports for Sarawak Cable. One of them is, again, who? Hong Leong.
Hong Leong Investment Bank Berhad and also AmResearch. Hong Leong has a maintained buy with a lower target price of 2.49.
Yes, exactly. And if you look at Am also, they also have a slightly lower one.
Correct, at RM2.20.
Well, that's all for us today. I'm Nadia Hassan together with Sulhi Azman. For more on the news, of course, there's the Edge Markets for you. And it is Monday, so you have a fresh copy of the Edge Financial Weekly if you haven't read it over the weekend. And of course, the Daily as well. Good night, guys. Let's pray we'll have a good week.